What's up guys, welcome back to the new video. I'm your host Yash from Equitymaster, trying to make markets simpler for you. Thank you for tuning in every week. Before we move on, please note that this video is for information purposes only. It's not a stock recommendation and should not be treated as such. There's no opinion or view on any stock covered herein. With that disclaimer out of the way, let's get started. In today's video, I'm going to talk about Adani Group stocks. You see, Adani Group stocks have seen a sharp decline, with few of them down as much as 30% with no bottom in sight. The stark fall comes following some serious allegations of bribery and fraud on Gautam Adani last week. Given the ties that the Adani Group has with Prime Minister Narendra Modi, the potential for green energy, retail obsession with Adani Group stocks, and more reasons, we feel that the Adani Group shares could start to become a proxy for trading the sentiment around how well the Prime Minister's term is going. Stay with us till the end as we run through the fundamental company specifics that Adani shares could enjoy. Let's start with the story first. On day 1, as soon as the US Securities and Exchange Commission charged Gautam Adani and 7 others in bribery and fraud case, shares of Adani Group companies lost nearly $22 billion in early trade. On day 2, most group stocks recovered as 6 of the 10 group companies posted gains. However, Adani Green Energy, which had to cancel a $600 million fundraising through US dollar denominated bonds, once again dropped 8%. Later on Monday this week, France's Total Energies, one of the biggest investors in Adani Group, said that it will make no new financial contributions till Gautam Adani is cleared of all the charges of bribing. This resulted in another 9% fall in Adani Green Energy shares on Monday. Meanwhile, another big investor in Adani firms, GQG's Rajiv Jain, has reaffirmed its faith, stating that there's no shift in their investment strategy despite these allegations. Now, I'm sure you may have read plenty of stuff regarding the recent crash in Adani Group stocks. As an investor, it's our business to find opportunities based on data and news. So, to cut the long story short, let me try to answer the burning question on everyone's mind. Which Adani Group stocks should you look at after the recent correction? Well, let's first list out the Adani Group companies along with some basic data. This table shows the Adani Group companies along with some of their valuation metrics. We have not considered the price to earnings multiple for Adani companies, as they mean nothing when you look at companies like Adani Green, Adani Total and Adani Transmission, as these have minuscule earnings. Probably the right way to look at them would be via the price to book value or EV to EBITDA, as they are asset heavy businesses. Out of the Adani's table, there are currently only 5 companies which make sense of valuations in some way and have decent fundamentals. So, let's look at the top 5 Adani stocks on the basis of price to book value. The first stock on this list is ACC. ACC is one of the largest cement companies in India. Due to margin pressures as well as a jump in tax outgo, ACC has recorded a huge fall in profits in the most recent September 2024 quarter. The results are not strictly comparable on account of a merger that happened this year. Also, September has not been a good quarter for most of the cement companies across the board. Major manufacturers have reported a decline in margins in the quarter, mainly on account of lower prices, leading to lower sales realizations. In fact, even those that have shown an increase was mainly due to acquisitions. Besides, challenges like extended monsoons, floods and subdued government demand also acted as spoilsports for the cement players. Little wonder that majority of the cement companies are down anywhere between 25 to 30% from their respective 52-week highs. Nevertheless, given the long-term potential of the sector and growth trajectory ahead, ACC could emerge as a big beneficiary. Housing and infrastructure, the key drivers of cement demand in India, continue to remain massively underpenetrated. Besides, the consolidation happening in India's cement sector bodes well for long-term stability of cement prices. ACC, along with Ambuja Cements, is the second largest cement group in India. The consolidated entity has an operating capacity of 97 million tons at present, and the company's goal is to take it up to 140 million tons by financial year 2028. Needless to say, a good part of the incremental capacity will be created under ACC, thus allowing the company to participate in the sector growth story. Besides, various capex and opex programs are in place to accelerate cost reduction journey. For example, The consolidated entity currently transports less than 2% of its cargo via sea routes. However, with the recent acquisition of Penna Cements, it will gain access to as many as 5 bulk cement terminals, thus allowing 10% of the company's cargo to be transported by the sea. This move alone can shave off around 600 crore rupees from the company's costs, which is a significant number. Similarly, similar cost-saving measures elsewhere could result into the operating margin seeing considerable improvement going forward. On the balance sheet front, ACC remains rock solid with almost zero debt, and the good news is that the company expects to remain debt-free or have minuscule debt despite the planned capacity expansion. The company's current price to book value multiple of around 2.3 is lower than its long-term average of almost 3x and the industry average of 3.5. Moving on, the next stock on this list is Adani Ports. Imagine that you can get India's largest private port operator at decent valuations. Yes, Adani Ports is available at a price to book value multiple of 4.3x compared to its industry average of 4.8. The 5-year average comes to around 4.4. When looked at from a price to earnings perspective, Adani Ports trades at a price to earnings of less than 25 times compared to its median average of 28. Adani Ports commands over 60% market share of India's port infrastructure and has the largest container handling facility in India. Under a concession from Food Corporation of India and various state government agri-commodity warehousing departments, it owns, operates, or is in the process of developing silo-based for the storage of food grain and facilitate the transportation of grains. Besides, Adani Ports owns and operates India's largest multi-product special economic zone. With a network spanning 15 ports and terminals across India, as well as the ownership of strategically important Haifa port in Israel, Adani Ports is also expanding its footprint into defense manufacturing and logistics. If you glance through the financials, the company has an impressive track record on how efficiently it manages capital along with superb return ratios, revenue and profitability growth numbers. While the debt is high, it generates massive operating cash flows. It has decent leverage ratios despite being an asset-heavy company. Being the largest commercial port operator in India, Adani Ports has an advantage over its peers in terms of cargo handling capacity and asset diversification. The company has expanded its presence in all major ports organically and inorganically. The increasing trend of containerization, lower cost of coastal transportation, and favorable government policies are expected to drive up cargo volumes, and Adani Ports is set to benefit. Moving on, the next stock on this list is Ambuja Cements. Ambuja Cements at the current price of Rs 500 commands a price to book value multiple of 2.4x compared to its 5-year median of 2.9. Its industry average stands at 3.5. A prominent cement company in India, Ambuja Cement is known for its diverse sustainable businesses. Since its inception, Ambuja Cement has focused on providing eco-friendly home building solutions. The company has a cement capacity of 31 million tons with integrated cement manufacturing plants and 8 cement grinding units across India. The company manufactures and sells various types of cement such as Portland Pozzolana cement, ordinary Portland cement, water repellent cement, among other things. Ambuja aims to strengthen its market share in the southern markets of India by completing the acquisition of grinding unit in Tamil Nadu. The company also aims to improve its market share to 20% through organic capacity expansions as well as inorganic acquisitions. In line with Ultratech's move of acquiring India Cements, Ambuja has also acquired Penna Cements for 104 billion rupees, which increased the company's market share by 8%. Coming to the financials, Ambuja Cements has reported revenue decline of 14.8% in financial year 24. However, EBITDA growth came in at 25%. EBITDA margins also improved significantly to 19.3% in FY24. Going ahead, Ambuja Cements management has guided for reducing costs of 8 to 10% through efficiency, product improvement, and an annual capex guidance of Rs 75 billion to expand capacities. Moving on, the fourth stock on this list is Adani Wilmar. The stock price of Adani Wilmar is trading at a price to book value multiple of 4x compared to its 5-year median price to book value of 6.3 and its industry average of 4.8. Adani Wilmar has an established market position in domestic edible oil market with leadership position of Fortune brand in the edible oil segment. In financial year 2024, the company's performance was impacted owing to declining edible oil prices. Impact of high inventory also impacted its operational performance. Nevertheless, the company's margins are expected to stabilize in tandem with edible oil prices. Adani Wilmar is also expected to benefit from the recent demerger, where the group's flagship company, Adani Enterprises, decided to demerge its food and FMCG business held under Adani Commodities. This will be transferred from Adani Enterprises to Adani Wilmar. In the most recent quarter, Adani Wilmar has posted the highest ever sales and net profit. Going forward, Adani Wilmar could recover along with the positive sectoral developments. The edible oil sector hasn't performed in a while, but with the prices stabilizing, Adani Wilmar's strong distribution network can be a strong driver. Moving on, the last stock on this list is Adani Power, India's largest private thermal power producer. At the current price of Rs 460, Adani Power trades at a price to book value multiple of 3.2 compared to its 5-year average of 3.8. Its industry average stands at 3. At present, Adani Power accounts for around 8% of the total installed coal-based thermal power capacity in India. In recent years, the company has taken the inorganic route by acquiring smaller companies. This is done so it could reach the target of 30.7 gigawatts by financial year 30. The company recently acquired Coastal Energen for 3,340 crore rupees and LAPL for 4,100 crore rupees. Adani Power has also acquired Adani Dahanu Thermal Power Station for 820 crore rupees in September 2024. Going forward, the company plans to expand by adding capacities at its thermal power plants in phases over financial year 28 and financial year 30. The company's management has also acknowledged the potential threats from renewable energy sources and battery storage. On the green initiatives front, Adani Power is conducting a pilot study on green ammonia blending at the Mundra site. This study aims to assess both the technical feasibility and market visibility of this innovative solution before it gets implemented. Furthermore, Adani Power has secured a 25-year agreement to supply 1500 megawatts to Bangladesh, benefiting from the recent improvements in payment timelines from the Bangladesh government. Backed by a robust pipeline of projects, Adani Power is well positioned to capitalize on the emerging opportunities in India's power sector. So there you go. These were some of the Adani Group stocks to track after the recent market correction. We agree that the Adani Group doesn't have a good reputation when it comes to corporate governance. While markets may have neglected this at times, we have not. Also, despite the recent correction, the valuation of many Adani Group stocks still don't make any sense given the fundamentals that they have. Some of these stocks are still riding the narratives while the business remains over-leveraged. Nevertheless, the group has made some incredible contributions to the world. Adani's renewable energy plans are amazing and have upended the energy landscape. The group is on the cusp of even more world-changing achievements in artificial intelligence and data center interfaces. Additionally, Adani Group's commitment to reducing the cost of green hydrogen reflects its dedication to large-scale sustainability efforts. The Adani Group has also recently decided to invest $5 billion in India's metal industry, targeting copper, iron, and steel production. While the current issues may appear to be a big setback, thorough research is needed before making any investment decisions. You could quickly refer to the fundamentals and valuations of Adani Group stocks on Equitymaster's powerful stock screener page. Anyway, this is what we think of the Adani Group stocks at the moment. What do you think, dear viewer? Do you have a different view? We would love to hear it. Share your views in the comment section below. That's it for today. Don't forget to like this video and share it with like-minded investors and make them smart as you are. See you in the next one. Happy investing.